Hey everyone, welcome back to our APIGURU channel. For those of you who are new here, I'm Damien Thurn here. On this channel we share everything you need to know about APIs. Today we will explore what open banking and PSD2 are. Let's get started. Open banking is a financial services model that allows third-party financial service providers to access a customer's bank account data with the customer's consent through secure application programming interfaces. Open banking began as a regulatory initiative to increase competition and innovation in the financial sector. It gained momentum with the European Union's revised Payment Services Directive, which came into effect in January 2018. PSD2 required banks to open their payment services and account information to third-party providers, provided customers consented. This shift aimed to foster a more competitive and transparent banking environment by enabling new players to offer innovative financial services and products, ultimately benefiting consumers with better choices and enhanced services. The adoption of open banking is happening around the world. Despite regional variations in implementation and specific requirements, they all echo the core principles of the EU's PSD2 directive: consumer consent, data sharing, and increased competition in the financial sector. All countries colored dark green have a regulatory PSD2 approach to open banking. The core of open banking is that it requires explicit consent from the customer. The data cannot be accessed or shared without the customer's permission. Let me walk you through an example of a consent flow to help you better understand how everything works. To start, you need to provide explicit consent to a third-party provider to access your financial data. This usually involves agreeing to share your data for a specific purpose, such as using a budgeting app or applying for a loan. You will typically be redirected to your bank's secure website or app where you will authenticate your identity using your bank credentials. This ensures that only you can authorize the sharing of your data. When granting consent, you can specify the type and duration of data access. For example, you might allow access to your account balance and transaction history, but no other sensitive information. Once consent is granted, the third-party provider uses APIs to retrieve the agreed-upon data from your bank. This data is then used to provide you with the service you requested. You can review and manage your consents. If you no longer want to share your data with a particular provider, you can revoke your consent at any time through your bank's app or website. Once your consent period ends, or if you choose to withdraw your consent, the third-party provider can no longer access your data. They must delete any data they've collected, respecting your privacy. Let's walk through the process step by step based on an example. In the pre-consent flow, the third-party provider showcases the benefits of the product, which is, in this example, a budget guide. The consumer then logs into the budget guide. The budget guide provides upfront information about the open banking initiative, which in this example is Australia's Consumer Data Rights Regulation. The guide informs the consumer about the expected duration of the consent flow and outlines the steps involved. Next, the budget guide initiates a consent request to access financial data. The request includes the name of the specific service provider asking for access. It details the financial information they want to access, such as transaction history or account balances. It explains why they need the data and how it will be used for financial planning or payment services. It specifies the requested time frame for the data, such as the past 6 months. It indicates when access to the data will end. It also clarifies whether the request is a one-time access or recurring, such as for ongoing monitoring or services. This step ensures transparency and control over how the financial data is shared and used. The consumer selects the bank from which to share the data, and the budget guide notifies the customer of redirection before authentication. After the consumer continues, the budget guide sends the collected information to the bank's pushed authorization endpoint to obtain a request _ URI. This allows the budget guide to reference the request without directly sending the request object. The consumer is redirected to the bank's login page where they can authenticate using their existing credentials. The bank verifies both the credentials and the request _ URI. Once authenticated, the consumer selects the accounts from which data will be shared. The consumer authorizes the bank to share the data with the budget guide. The bank records this authorization and redirects the consumer to the budget guide with an authorization code. The budget guide records the consent in its database. Using the authorization code, an access token from the bank is obtained. This token is used to retrieve the relevant data through the bank's API and is then stored in the guide's internal consumer database. Consumers can revoke consent through the budget guide or online banking application. When consent is revoked, the access token is invalidated and the data in the budget guides database is either deleted or de-identified. This example illustrates the Australian government's implementation of the Consumer Data Rights CDR legislation designed to empower Australians with greater control over their data. While CDR and PSD2 share similar objectives regarding consumer data access and open banking, they cater to different markets and regulatory environments, leading to variations in implementation and scope. Open banking APIs serve as the foundation of the open banking ecosystem. They enable secure financial data sharing between banks and third-party providers, such as fintech companies, payment processors, and other financial service innovators. These APIs drive the development of new customer-centric financial services, fostering competition, innovation, and enhanced user experiences within the financial sector. Typically, open banking APIs include several vital components. The product API provides access to information about various bank products, such as deposit accounts, credit cards, and home loans. The customer API allows access to contact details, while the account API offers insights into customer banking products, including balances. The transaction API enables customers to view their transaction history and spending trends. Additionally, the Payee API helps import customers' payee address books, facilitating easy setup. Lastly, the Payments API provides information on scheduled payments and direct debits, streamlining financial management for users. However, before these third-party providers can consume open banking APIs, they must undergo a registration process to ensure security, compliance, and trust within the financial ecosystem. The registration of third-party providers is a critical step in open banking. It ensures that only authorized entities with a legitimate business purpose, strong security measures, and consumer protection mechanisms in place can access sensitive financial data or initiate transactions. This process mitigates risks such as data breaches, fraud, and unauthorized access, maintaining the integrity of the open banking system. Thanks for watching. If you enjoyed this video and want to see more, hit the subscribe button and turn on notifications so you don't miss any updates. Please give this video a thumbs up if you found it helpful and let me know what you think or if you have any questions in the comments. Look out for our next video in which we will review the most common API business models.